Hello, everyone. This is Matthew Frailey, founder of Breakpoint Trades. I've been here since 2003, providing advanced technical analysis, market commentary, actionable trade ideas, and advanced mechanical trading algorithms like you see here with our mean reversion systems. And of course, our now very impressive, very excited KISS trend systems. So, going to be launching a new product there soon. For now, you can still access this area even if you're not a subscriber. That's soon going to be locked down, guys. You should sign up to Breakpoint Trade so you can get automatic notifications for these amazing KISS systems. Anyway, let's get started with the newsletter. It's been about a week since I put out a newsletter on YouTube. And this is our backend recorder for our website, which I'm going to get started now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Tuesday, December 12th newsletter. Happy holidays, everyone. December 12th, only 13 days now until Christmas. Pretty crazy. Also, an admin comments. Steve Nelson, as you know, is now out of town. He's in Mexico. He'll be gone at least for a week. So you have me every day. I'll be doing the newsletters until next week. All right. So just a heads up on that. But again, like I said, we're in holiday mode. The market is in holiday mode. Using my football analogy, the Bulls still control the football. They intercepted the football in late October, as you know, after that seasonal weakness from late July into October. They intercepted the football. They've run multiple touchdowns since. The move off the late October lows produced a rare breath thrust signal, which we pointed out in real time. And that signal has played out as the market has just continued to rally very strongly with very little pullbacks. Again, I'm not going to overanalyze the market this time of year. The trend remains up. Um, and, that doesn't mean you throw caution to the wind. You still want to adhere to your system. You want to adhere to your stops, your discipline. I will say our KISS systems have nailed this move, getting into a lot of stocks and ETFs just off the lows, and they've constantly raised their stop protection. The nice thing about the KISS systems is you can keep you in the trend, and they provide you with that smart trailing stop that is raised over time, so you always have an exit plan and to protect those profits. Good. Again, I will be launching high performance versions of the KISS system hopefully soon. I wanted to get it done before the end of the year, but we're getting close. It is coming, guys. And anyway, let's get started here. So, as I just discussed the KISS systems, like I said, for those of you who are, our subscribers, make sure you're set up to receive the alerts. So this is taken directly from the website. Remember, go to the systems section, go to KISS STS tables. You'll be brought to the area. The KISS systems, we run them on almost 630 instruments, various stocks, ETFs, and you can have various baskets here. You can search. But anyway, if you can set your favorites, and when you set your favorites, every day the system will automatically send you an email notification of any new entries on your favorites or if a new smart trailing stop was generated. So you can see here on my favorites, these were the ones that generated new smart trailing stops. I guess URA had a new first entry, so it just entered. These actually no, this is the second STS, so it actually entered. Where did it enter? On 11/20, so it's got a new smart trailing stop finally. But you can see some of these. There's been 10 smart trailing stops in BULZ since its entry on 10/31. That position's up 58.35%. That would pay for a lot of Christmas gifts, wouldn't it? Same for SOXL. Again, those are leveraged ETFs, so they're going to have big percentage moves. But you can look at the favorites here. On my favorites list that I've had set up, since those late October lows, look at these gains. Again, you could just follow it like a mechanical system. Whenever there's a new smart trailing stop, put it into your broker, and that's it. Again, last thing, for you to receive email notifications, you got to go to the favorites tab. You got to click the receive alerts. If you don't do that, you won't receive email alerts for your favorites. You have to opt in because of spam laws. And if you're not a subscriber, you can't get that. So What are you waiting for? Subscribe. Our membership prices are very reasonable for what you get. You won't find anything like this out there. All right. Next, item number 3. This shows you an example of what like an email you would get. So this is from my Gmail account. Again, this is from about a week ago, but you get a nice clean table. It shows you, your new smart trailing stops or things that stopped out or new entries. Okay, so very nice thing for the website. If you're already a subscriber and you're not utilizing this, you're missing out on a great resource. Okay, let's move back to the general market analysis. So here's the index sector table, what transpired today and this week. Today, market was up, indexes, except for the Russell. Russell's been on a tear, so, logical to have some consolidation here. For the week, the indexes are up anywhere from, about 0.9% for the S&P. NASDAQ up 1.68%, the Index 100. So the big cap tech stocks have led this week, and you can see that clearly. The Russell is up the least. And as far as the major market sectors, we follow 21 of them here. The majority were up today. It was an update, just a few down. The weakness was concentrated in the energy area, not surprising with crude oil, how far it's sold off. But it is in a demand zone, so I'm watching for potential bounce eventually. And metals and mining had a pullback. Gold stocks, precious metal stocks have really pulled back lately over the last couple weeks, so not surprised to see that. U.S. dollar today down about 0.3%. Crypto was down today. That was very extended last week, so it's given some profits back. Down pretty good for the week. Look at those weekly losses. Commodities, again, continue to be weak. The general DBC, that's the index of commodities, down 1.5%, down 1.9% for the week. Crude oil down 3.8% today alone. Natural gas down yet another almost 5%, down 10.5% for the week. That area has been selling off very strongly for quite a while. Some strength in the ags area, particularly wheat and coffee. I'm not showing those tonight though. Precious metals again continue to be weak, especially the stocks. GDX, the miners down 2.34%. Gold only down at 0.05%. Remember, the stocks lead and they are leading down. So that area again remains one of the most difficult to trade. By the way, the KISS systems have been flat, that area, the high performance ones. As far as bonds, little tick up in the bonds today and a move down in the rates. Item number 5 shows the economic news calendar. Again, today we had the CPI, which came in a little lighter, showing that inflation continues to decrease. And tomorrow we have PPI, which is the producer inflation. So what the manufacturers see. So we'll see how that comes in, PPI, core PPI. And of course, tomorrow is the FOMC. Do I expect them to do anything? No, I don't think they're going to do anything, change rates or anything. Definitely not going to lower rates. They're not going to raise rates. Again, it's all about what they say, so we'll see how the market reacts to that. And let's go and get to these index charts. So first chart below, item number 6 is the daily snapshot of the 5 key major indexes with simple Bollinger Bands. Again, we had that typical seasonal weakness from late July into October, played out perfectly, which we discussed. We got very oversold in late October below the lower Bollinger Bands and all these indexes. Bearish sentiment was extremely high there. Everything was set up for a rally, and boy, we got it. We had a breath thrust move out of there the first week, and man, it has been straight up since. The magenta moving average here is the 9 EMA, and the indexes have basically held that. I guess the index slightly lost it there, but it held its middle Bollinger Band. But the Dow in particular has been just straight up move. The Dow has really played huge catch up here. Next, chart number 7, here's the Dow itself. Again, just a vertical move up since the October lows. Just continues to scream higher. No real divergence here either, just a little overbought. Moving on to the S&P 500 charts, our proxy, here's the weekly view of the S&P, again up about 0.85%. Testing this kind of resistance zone, and again, I think ultimately it's going to break through there, right? It's the third test of this area. The next target then would be the all-time highs. Chart 9, here's the daily view of the S&P. Again, just a straight up move. You know, we were looking for a possible pullback in early December, and man, all we did is get 1 day, and it has just been straight up since. There is a MACD divergence, slight divergence setting up here, and an RSI divergence. This could be some sort of fifth wave setting up. Once you get a fifth wave that is ended, then you'll get a decent ABC correction. But we are in December 12th. We're running out of time for a good correction. We're running out of time for a hard correction in the market before Christmas holidays. And again, there's only 13 days, and then obviously much less trading days. So one thing I've discussed often, I discussed today again in trading community, divergences are not sell signals. Again, they can play out, but the thing about divergences is, they're not sell signals. You note them. Kind of my analogy for a divergence is, let's say you're driving your car and on the radio it says there's going to be a huge downpour. It's going to be very high winds, and you're driving your car. Do you pull over and stop driving, even though the weather hasn't come? No, you continue to drive. Maybe it passes, right? Or maybe the storm eventually comes and you have to pull over because it's raining too hard and you can't see. That's kind of how divergences are. You note them, but that doesn't mean you just exit your position. Maybe you tighten your stops up, stuff like that. But that divergence may not play out and it may get negated. All right. So again, divergence is a powerful thing, but it's not a sell or buy signal on its own. Chart 10, here's the equal weighted S&P. Again, the equal weighted, this inverse head and shoulder is obviously played out, and it's now exceeded this next supply zone. It's playing some catch up here through the market. Chart 11, here's the KISS system. Again, the KISS systems have done fantastic here. KISS system went long just a couple days off the October lows on the S&P, put an initial stop right at that swing low, 4104, and since then it's raised its stop 3, 4, 5, 6, 7 times. Current stops are on 44.95. So the stops are made to try to give wiggle rooms. They're not hit on noise, but be tight enough that you don't give up much when they do get hit. Maybe they trigger 3-4% off the highs. So that's the beauty of the KISS systems. Again, if the market just wants to continue, the S&P wants to go up another 100 points before a pullback, well, the KISS system will keep you in. If there's a rug pull before then, well, you're protected with your stop. That's the beauty of the KISS systems. You don't have to guess. Image number 12, here's the 4 time frames we like to follow. Like I said, just, what can I say here? Price has been holding the ATR on all these time frames, even the 78-minute. You can see in October how wide that moving average ribbon was. We had a DeMarc 9, we had a support cycle, everything lined up. 3 things lined up there for a rally, and boy, that played out. Here's another little educational thing, guys, and I've talked about this, and I know you guys don't have this cycle indicator. Again, there are versions of it out there you can find on TradingView, but ours has a couple custom settings. But anyway, I've discussed this before. The cycles are really powerful. So whenever you see price ping pong between the cycles, support, resistance, bounces off the support cycle, sells off of the resistance cycle, bounces off the support cycle, sells off the resistance cycle, bounces off the support cycle. It tells you that you're in a consolidation wave. And whenever I see that, I get excited because I know that once price breaks through one of these cycles, whether it breaks through the support cycle, resistance cycle, and here it broke through the resistance cycle, that is a confirmation of a trending move. You could jump on board that. So you could have went long right in here and enjoyed this rally. So whenever you see a bunch of price responding like ping pong back and forth to the cycle indicator, get ready for a trending move like a wave 3. I love seeing that. And this indicator is fractal. I mean, you could use it on a 1-minute chart, a 5-minute chart, a daily, a weekly, doesn't matter. But very powerful whenever we see a bunch of them in a row like that. Chart 30, here's a 60-minute view. We've been following this channel. We're starting to try to break it a little bit. The slope of this channel is pretty flattish, so wouldn't surprise me we just bust up through it. As far as to have a symmetry break, eventually you need a pullback larger than about 50, 51 points. That's been the largest pullback in the uptrend from the October lows, as you can see. Chart 14, here's a 30-minute view. Steve showed this coil last night. In fact, we exceeded it, this measured move so far. Chart 15, here's a 5-minute view. Just shows you the steady uptrend we've been having, staying mostly above the VWAP all day long over the last several days. Chart 16, here's the triple Qs. Again, they've been leading this week. They're up about 1.6%, quite a bit more than the market. Again, all they did is pull back to the 20 MA. You could see the 9, the 5, 9, and we're pinching into the 20, and we've rallied to a new high. There is a little MACD divergence setting up here. You see this? So this could be some sort of fifth wave move or something. Once it's ended, then we get our deeper ABC pullback. Chart 17, here's a half-day chart. It shows you the same chart, but you can see like a wave 3, 4, and we're in some sort of 5. And again, wave 5 is going to extend. I'm just saying it's with the MACD divergence, that supports a potential fifth wave. Wave 5s always have MACD divergence, in my opinion. Now, if you don't have MACD divergence, you're not in a wave 5. You're likely in some sort of wave 3. So that's a little pro tip I've learned. Chart 18, here's the 60-minute view. Again, all the the Qs had was a simple 3-wave ABC pullback, held that moving average there, and it rallied straight up. Guys, in uptrends, and I've talked about this many times, and the KISS systems utilize this as well. In uptrends, you get 3-wave pullbacks typically. So if you're an uptrending instrument that you're following is uptrending and you want to get an entry, once you start having a pullback, look for 3 waves. The 3 waves are your gift. Okay. Again, pullbacks can be more complex than that. They can be coils and whatever, but generally 3 waves. And by the way, the KISS systems have a technology in there that look for various ABC pullbacks and uptrends. Chart 19, here's a 30-minute view showing this coil, which has played out hugely, just straight up vertical move without really much of a pullback. RSI 5 is quite overbought at 95% now. Chart 20, here's the KISS system for the Qs daily, which went long, essentially 2 bars off the lows. Really excellent entry. The previous one was a whipsaw, which is fine. The previous one before that was a big winner. And that's what the KISS systems will have. You get a trending move, then it's sometimes a whipsaw, then a trending move. Again, you can sometimes have 2 trending moves in a row, but a lot of times you'll have a whipsaw in between. It's just how trending markets type work. But you can see all these smart trailing stops since, just awesome move there. Chart 21, here's the 4 time frames. Again, very similar to the S&P. You could see on the half day, you had a support cycle there. You see how you broke through the resistance cycle? Remember I talked about that's like a breakout, and this would be like a 4th wave. We're working on some sort of 5th wave. So the next resistance cycle could be important. Keep an eye on that. Of course, on the 78-minute, you had the same thing occur as on the S&P. Price oscillated between these cycles almost perfectly. Then when it finally broke through the cycle, that signaled your breakout. So that's something, again, guys, you can use in the future if you ever see this. And once price breaks through the cycle, buy it or short it if it breaks through the support cycle. Chart 22, Russell 2000, so far struggling up at this resistance area, but again, hell of a rally since the October lows and an inverse head and shoulder pattern. And chart 23, here's the monthly chart. Again, why did it rally off that area? It was a major support area. You could see it's been that 160-ish area. Again, it's not one price, it's kind of a zone. Has been important since 2018, 2020, 2022, and recently. So was previous resistance, held as support. That does it for the indexes. Moving on, look at some of these indicators. Chart 24, here's the VIX, continues to melt down, tagging its lower Bollinger Bands. If it goes below the lower Bollinger Bands, that'll be a signal for us to get a little more defensive. Chart 25, here's the VIX with the VVIX. Again, Bollinger Bands are starting to pinch on both of these, so be aware of that. A bigger move could be coming. Looking at a few of these trending indicator systems. Here's the NYSI 9 EMA crossover system. Again, Does a beautiful job about catching trending moves on the S&P, you know, very objectively. Never going to catch the bottoms or the tops. It needs a, move to confirm it. But still, very excellent trade. Again, it's a simple system. Chart 27, here's another nice system. NASDAQ McClellan summation with the 2 and 5 EMA. And look at these beautiful buy and sell signals from these crossovers. I will say right here, the slope is starting to flatten, so I would continue watching it now. Chart 28. Now, again, the trend is up in the market, guys, but here's a couple divergences to note. Again, like I discussed above, divergence is not a sell signal, but it is a kind of a warning to, maybe look at your long positions, make sure that, maybe you tighten your stops up, or just be on guard, basically. So right now you have a higher high in the S&P, you got a lower high in the 10-day average NYAD. So there is a divergence here setting up, and you can see these divergences in the past can lead to decent pullback. Sometimes they're just shallow, like that one there in June and early July, which is a little pullback. And the one in April wasn't too much either. The one in July, that was obviously a deeper pullback. The one in February was as well. But something to watch. Chart 30 here, or 29, here's the percentage of stocks in the S&P 500 above their 20-day moving average. And again, you have a divergence here. You actually have two divergences. You had a divergence the previous week, and all we got is a tiny pullback in the S&P. S&P rallied to a new high, and this is still making a lower high yet again. So you have a divergence here. Again, these are a couple to be aware of. Chart 30. Again, I discussed this last week, but the beauty of being a subscriber, where you get our standard, web page newsletters, is we provide the live chart URLs to all of our charts. So if you love some of these really nice system charts that we make, or whatever, you can click View Live Chart next in the newsletter, and you'll pull up the live URL. You can bookmark it in your browser. You can check it a week later instead of just looking at these static images. Or if you have a stock charts account, you can save it into your personal stock charts account. We're one of the only services, I think, that does this. So again, if you're just viewing us on YouTube, you're missing out on stuff like this. Moving on, chart 31, here's high yield corporate bonds. Again, remember the market follows high yield corporate, and they continued uptrend. So nothing new to say there. Chart 32, here's the 10-year treasury yield. If you go back and listen to my newsletters, in October, I talked about this around this 5% area being a potential major top. There was RSI, MACD divergence, and I said that would likely lead to a nice pullback in rates, which would help the market, and that's exactly what has happened. So rates did bounce a little bit, coming down again, but the 200-day moving average is here, so it could be nearing an area soon where we could see a bigger bounce, and maybe that'll correspond with a pullback in the market at the same time. Chart 33, here's the monthly view. Again, earlier this year, or in early fall, I talked about this fifth wave into the demand zone and the MACD and RSI divergence. I drew up this chart pointing out potential major bottom in rates, and so far it's been playing out. Again, as I discussed, bonds and rates are now in secular bear market. So I don't expect bonds to go back to the highs, interest rates to go back to 0%. But, they could work higher for a year or so, lower high, and then I think they come down again. Chart 34, here's a 60-minute view of the 10-year. It's in this channel. Something to watch. If it breaks this channel, that could be a trigger. All right, let's follow up on some of the market sectors. Chart 35, technology. Again, that's been leading. The issue with XOK is I discussed like a broken record. Two stocks, Microsoft and Apple, make about 50% of it. Just absolutely insane. But again, you do have a MACD divergence setting up here to be aware of. Chart 36, Jets, the airline ETF. Again, I put this out as a long idea there in late October. I'll trigger right off of this line, and boy, it has had a hell of a move. I hope some of you caught that puppy. Chart 37, banks. Again, nice move off this double bottom and through the 200-day moving average. Chart 38, KBE Bank ETF. I put this out as a long idea last week and it has done very well, as you can see. Hope you got it. Chart 39, financials. They continue to rock and roll higher. Last pullback bounced right off that 9 EMA, made another high. Chart 40, XHB home builders, straight up vertical move since that October lows. Again, with those rates pulling back, that has helped the housing market a bit. Chart 41, XLE Energy continues to be weak with that crude oil. We're into a little demand zone here, but if we don't bounce here, we could also work down to these lower areas. That's fine with me. By the way, the KISS system has been flat this area, even the high performance ones, so no big deal. Let it work out. Chart 42, here's the BPNER, Bullish Percent Energy Index. Just showing you where it is. It's right at, 39, 40% roughly. Had an excellent sell signal there in September up in that overbought region. The oversold regions down here, which we're not quite into. That's why I said I wouldn't mind even one more dip in the energy area, getting down into that zone. That's your low risk area for swings. Chart 43, emerging markets. Here I redrew the pattern, kind of a little flag channel to watch. Moving on to commodities, chart 44, DBC, that's the index, just showing the weekly. So as you know, that 200-week moving average was held earlier this year, but we've now broken it. We broke it last week, and we continue lower. Chart 45, crude oil. Again, we pointed out that fifth wave high in crude oil in September. We said be careful for a correction. Also, then I talked about the little slanted head and shoulder pattern. And boy, has this ever played out. Now I can also count 5 waves down now. So I am watching for a potential if it finds support soon. There's a demand zone here, but again, clearly the trend is down. Chart 46, USO, the crude oil ETF. Here, this is a little bit different. You got a demand zone still a little bit lower. Again, wouldn't mind seeing it get into that area. Chart 47, natural gas just continues to melt down week after week. 3 weeks ago, it broke the channel, continues to work lower. Moving on to cryptocurrencies, chart 48, Bitcoin, again, had a really big pop last week out of a little slanted wedge. Got overbought, some mean reversion going on here. Chart 49, here's the weekly version of Bitcoin. Again, we pointed out the fifth wave low back in late 2022. That's played out. It's now up around the 50% fib area. Not going to go through all the Bitcoin type stocks, but we had numerous long ideas in this sector. Mara was one of them out of this coil. And if you bought that coil around the 10 area, had a heck of a percentage of move. Chart 51, US dollar. Again, bounced near that 61.8 fib. But is it forming a bear flag and it's going to come down again? We'll see. 50-day moving average is sloping down now. Moving average ribbon is pinching on the underside for a bearish configuration. Chart 52, US or Japanese yen. This is the weekly. Again, we had that potential double bottom there. So if the dollar does come down again, this will work higher. Chart 53, FXY. That's a way to play the yen long ETF. Moving to precious metals, chart 54. So gold, I really liked gold back in the October lows. It had formed basically an ABC low. Rallied up, pulled back to the 50-day, rallied up again. The problem that Steve and I had was 2 weeks ago on Sunday evening when futures open, gold spiked up to 2150, an all-time high, then reversed. So whenever you have basically a blow-off move, when you have that, then price needs to work that off, and that's what we're doing now. So now we'll see. We can form a higher low here. You got the 50-day, 200-day moving averages approaching. Notice the GDX-GLD ratio measuring gold stocks versus gold. So the ratio was leading. It's now back testing this broken trend line. We'll see if it finds support there or not. Chart 55. Weekly view of gold. Again, like I said, it broke through that resistance area 2 weeks ago, triple top, but the fact that it had that blow off move, unfortunately, that kind of doomed gold to then need to come down again. Jabber 56, silver. Again, silver just vertical. Nice move up, elevator down, right? Down to the 61.8 fib from the lows here. We'll see if it can find support in here somewhere. Jabber 57, there's the weekly view. Just shows that just last week, boom, just a heck of a sell off. And finally, Charter 58, here's the monthly view of silver. I cleaned this up. Basically, what you got here is a 4-year coil. Now, this is important because out of contraction comes expansion. So when this eventually breaks this coil and hopefully it's to the upside, this could be a monster move, guys, right? Because this has been, energy's been building here for 4+ years. So we'll see. Next, Charter 59, GDX, again, likewise, pulling back very strongly. Again, for the bulls, it needs to bounce pretty soon. You definitely don't want it to go and take out these last higher lows. Moving average ribbon is coming down, pinching a little bit. Jabber 60, here's a 2-hour view. Again, here, a channel to monitor. There's an open gap. We haven't filled that. That could be a target maybe in the short term. And then here's the ratio. So really, again, you need a trigger to go long here, guys. I could also draw an uptrend line from this low, I guess. So again, we need some sort of reversal for me to consider taking another long in this space. Jabber 61, there's the 60-minute view, same thing. Again, remember I pointed out that bearish symmetry break a couple weeks ago. That led to a lower high and a trending move down. Jabber 62 AEM, again, had a very similar look to GDX. It's come down. Now there's a demand zone in here. We'll see if it can find support in there or not. And Jabber 63 GOLD, same thing. All right, guys, let's move to trade ideas. Again, guys, we have fantastic trade ideas here. If you're not playing these, you're missing out. So AVGO, beautiful rally off this pullback. I pointed it out again yesterday, and I had a beautiful follow through. So awesome move. KISS system's been long that too for quite a while. Let me look where the KISS system is doing on AVGO. Yeah. All right, let's move on. KISS system's been long for a while, it seems. Jabber 65 NRDS, I call it nerds. I pointed out this coil a couple weeks ago, and beautiful swing. Congrats if you caught it. Trail the stops up. Jabber 66 ATHA, another long idea of mine from early last week. Beautiful bottoming pattern. Really nice move. It's hit its first target. Take some profits. Move your stops up. Jabber 67 EGHT, another one of mine. Broke out over a week ago. Continues to move up. Now the major target's up here around 4. Whether we get there or not, who knows? But you have a nice profit already. Jabber 68 Massey. It's been on the list really for a good month. Out of this horizontal rectangle pattern, it triggered in November. My first target was the major move at 100, which was achieved last week. If you're still long, guys, simply trail your stops up. I like to trail my stops up to the higher lows. So you had one here, and your latest higher lows around yesterday's lows or today's lows. So if it wants to keep going, you stay in the trend with protection. That's kind of how the KISS system works, basically. Jabber 69, CKPT. This is a long idea of mine back in November. Inverse head and shoulder pattern. It just played out fantastically. Again, this is an area to take some profits, obviously, given how overbought it was. Jabber 70, BYON. Nice move out of that base. Consolidating a little bit. Still holding the 9 EMA. Jabber 71, VSCO. Really nice move out of this inverse head and shoulder bottoming pattern. Pulling back nicely now. Jabber 72, Airbnb. This bull flag played out beautifully. Hope you caught it. Jabber 73, American Airlines. I mentioned this is a long idea a week ago, and it's moved up to its target. Take some profits. Jabber 74, YPF. One from Steve last night. Tried to trigger today, pulled back a little bit. But again, guys, when you're swing trading, don't react to noise. No reason to stop out of this today. You could put a stop maybe below the 9 EMA there. Jabber 75, Path, another one from Steve. Triggered today, but well off those highs. And Charber 76, AMBA, another one from Steve, still valid, hasn't broken its trend line yet. Charber 77, SARK, that's the inverse ETF to Kathy ARK Fund into this demand zone. So I have a little position on this with a stop just below this 3097 area. Now let's move to some new setups here, guys. So Amazon, beautiful coil setting up here. Keep on watch. Jabber 79 VTNR, low price stock, but kind of a wedge here. Positive MACD divergence. Big volume today, more than double the average volume, so one to watch. Low risk off the bottom. Jabber 80 FSR, Fisker, hell of a sell off after breaking that support. Again, look at the pickup in volume here. Essentially, that's capitulation volume. But again, we need a trigger to go long. So we have capitulation volume. We got MACD diversions. We need a trigger, maybe over this trend line. But this is one to watch soon for an oversold rally attempt. Jarbor 81, CTSH. You can see if it's in a fifth wave move here. But I think this could have follow through. But realize you're in a fifth wave, so I would keep this one shorter term instead of a big swing. Jarbor 82, Apollo, essentially a breakout, and so there's another long for you to monitor, guys. All right, everyone, that does it for the newsletter here. Again, happy holidays. Thank you for all your support. And on YouTube, again, if you're watching on YouTube, please like, subscribe, comment. That really helps the algorithm. And the other comment I get is, the YouTube videos, why do I do them in this way where, you could basically, guys, is to save time. I already have to do the newsletter for our standard audio recorder, like you see here for the website. And, it would be cleaner to do a separate YouTube video without all this. But again, I already work so much, so many hours in a day, family. So what I do is I essentially do both at the same time. So again, in case you wondered, that's why. Just so I don't have to spend, after doing one of these newsletters, you're pretty spent. The last thing you want to do is another video separately. All right, enough of that. Have a great evening. Happy holidays. Take care.